Hello there, ladies and gentlemen. Good evening. Thank you for tuning in. This is Christopher Aaron. It is April 4th, 2018. We are going to look at the near-term technical action in gold and silver here, and we also do something a little bit different. We typically are focusing on the charts, but I want to discuss some of the fundamentals, especially on the physical side of the gold market in this broadcast. And the reason that I want to do that, and I also want to point your attention in this direction, is that we are going to be covering some of these fundamentals at certain intervals over the course of the next several months. If you would like to skip ahead and get my best summary of the fundamentals that are impacting gold and silver now, you can do so at this time for free. There is an article that I've posted on a partner site of mine, which is called goldeagle.com. And this article is fairly long, but it's a rather intensive look at the supply and demand fundamentals for the physical gold market. We cover everything that is impacting the gold market as can be proven by observable data. So I'm going to be covering these topics in more depth in these video series going forward throughout the next several months, certainly throughout the rest of the year. But if you want all of the information on this now, you can click on the article. I have that below. It's for free. And if you're relatively new, or if you just want a refresher of what's impacting the physical side of the gold market, that is going to be available for you to read at your leisure. Let us look at the prices of gold and silver over the last 3 days. What we notice here is that gold is just being rejected continuously here in the spot and also in the futures market when it begins to come close to this region, which is functionally representing 2016 highs. 2016, 2017, and now 2018 highs. So the actual print high that I'm going by for 2016 in the summer was 1378. We had a slightly lower high print in 2017, and we are seeing some lower highs come in here, but functionally this market is trying to overcome that extremely stubborn resistance zone. And we can just see, so it's nothing, if you were just looking at this chart as its own, it looks like, well, got close to 1350 and came back down. But of course, you have to be putting this into the proper context. And if you are, then you know that how significant these tests are right here. This attempt that is ongoing, we've been seeing this from January. There have been 4 or 5 mini attempts already to break through this level. Not ready yet. Clear rejection day. That's all we can say from the short-term price action today. Once again, gold is not ready to break those 2016 highs. Silver, what can I say? It continues to act weaker than gold, and there's not much else that we can say about silver from the short term. We are not going to bring up the charts this week in the video. I just want to make this one point. Within the next several months, if you're a precious metals bull, we have to see the gold to silver ratio start to come down. This is not one of these discussions, and I will not be making videos like this 3 years in the future, just saying, yeah, one day it's going to move higher. We just have to hold on. We just have to hope one day. No. That's not the nature of my business. There is a defined level that I'm looking at in the gold to silver ratio, and that ratio has to come down, and it has to come down strongly within the next several months. And if it fails to do so, it's not good enough for it to just linger in this range above 80 ounces of silver to buy 1 ounce of gold. That's not going to be enough. So we talked about that in the premium service in the last weekend. There was a video on that several weeks ago if you want to go back and look at that one. But I'm just going to say the gold to silver ratio has to come down in no uncertain terms within the next several months, or we're going to have to radically alter our perspective for the precious metals. And every individual will have to decide what to do at that point. I'm simply telling you how things look based on the underperformance that we continue to see in silver. There's still an opportunity. There's still an opportunity for these metals to show themselves, especially it appears to be most likely shaping up for after the middle part of this year. But this opportunity does not extend forever into the future, according to my charts. So let's look at a few of these things. And by the way, so once again, you can find all of this information in the article right now, much more depth. And we're going to cover things like this going forward over the next few weeks. But these are some samples of what you'll find in the article and a brief discussion right here. So for example, we are looking at the world gold supply and demand statistics out of the Thomson Reuters survey, which is essentially considered the gold standard for fundamental supply and demand in the physical market. So they do quite extensive research there, surveying, gathering data, gathering how much gold is coming out of mines, out of scrap, for demand, jewelry, industrial, central bank purchases, retail demand, ETF demand. This is quite an extensive report. This comes out once a year. And we are analyzing this and then also looking at some other important things in the gold market. So when we look at supply, for example, we can see there has certainly been an increase in supply over the last 10 years. Something like a 30% increase here over the last 10 years in gold. That is not insignificant. So I would just tell you to keep this in mind, as we see the struggling that gold is doing. And yes, I am someone who does believe that there is manipulation in the gold market, as there is in most markets, by the way. So certainly selling of some paper can account for some of the stagnation in gold. But we also have to keep in mind there is a lot more gold coming out of the ground now than there was 10 years ago. It's just to keep that in mind. So if you want more analysis on this, please click the link below for the free article. We also look in the article, and we will discuss, once again, we're going to discuss each one of these in much more depth in future videos. This is just a high-level look. For example, did you know that what is the biggest demand component for gold? Did you know that it is actually jewelry? It is not investment demand. And specifically, if you were to break down the jewelry demand for gold, over half of the jewelry demand in the world comes out of two countries alone, India and China. So when you break it down and you actually analyze the numbers, you see that 28% of the world's gold demand comes out of jewelry from India and China alone. So it's an incredible amount of the world's total gold that is being drawn into those two countries every year. And here we look at something resembling a traditional Indian, although quite lavish, yes, but a traditional Indian wedding attire. And I will admit, I got this from the internet. I have not been to India to observe a wedding ceremony yet. I would like to. If you are getting married in India and you would like to invite me, I would love to attend. However, I have not had that opportunity yet. So this is what I am told from my research some of the traditional Indian attire looks like during the wedding season. Whether or not this is 100% accurate, that's not my point. The point is the statistics here show that jewelry is the single largest component of demand in the world even to this day. And most of that comes out of India and China. So we had better pay attention to what happens in those countries when we're analyzing the gold market. Another big one, this is so interesting. Again, we'll go into more depth in all of these in the future, but we're looking at central bank purchases, net central bank purchases. And did you know that central banks were net sellers of gold? In other words, they were divesting of their gold holdings from the mid-90s through the crossover year, which happened in 2009, when they became net purchasers for the first time in about 2 decades. Net purchasers. And you say, why would central banks be net purchasers of gold? I mean, no country officially ties its currency to gold anymore, so why are they buying this stuff? So we get into more of that in the article, and we'll get into more of that in the future. Of course, there are some properties that make gold the best form of money that humankind has found yet. It's not perfect, but it's the best that we've found yet. And I believe there's something about that that still impacts even the central bankers around the world. There is something ingrained, I believe, in our evolutionary or developmental psychology, depending on how you see the world, that is drawn to gold and that knows that gold is the best form of money that we have found thus far as a species, best store of value. What are some of those reasons? Very, very rare. We can see all the gold ever mined in the history of mankind could fit into the center of a tennis court match. Gold is extremely divisible, malleable. The statistic that I have seen says that a single ounce of gold can be drawn into a gold wire that is 50 miles long. 1 ounce of gold into a wire 50 miles long, or 80 kilometers if you're in the rest of the world that does not use our system of miles here. And gold basically is never destroyed. You can lose it at the bottom of the ocean for 1,000 years. You can pull it back up. It will be the same gold. It doesn't rust. It doesn't burn. It doesn't corrode. It doesn't tarnish. So all these things. Oh, and of course, it's the only form of money that has never lost all of its purchasing power, as every fiat currency in the history of mankind ever has. And the US dollar, well on its way to doing so. Although this can certainly take a lot longer. They can kick the can much further down the road than some people suspect. So this is just a high-level overview. You can see, as I said, much more. The link for this article will be below in the info section for this video. Have a check. Read it at your leisure if you'd like to. If not, I'll be covering these topics and more in some of the rare fundamental-based videos that I will do. If you would like to check out the latest on what is actually happening with the prices of gold and silver, with the mining sector, with the individual miners that we are buying and selling here, all of the hard chart analysis goes to premium subscribers every week. You can find more on the main website. If you are new to the precious metals or you would like to discuss your situation, I do individual consultations on a one-on-one basis from someone who does not sell the metals, someone who will not try to push you to buy something that maybe would not be in your best interest. I simply look out to do a what would I do if I was in your situation type of scenario. We go from there. So thank you very much for watching this week. Next week I'll be traveling. I'll be on the road, and I may or may not have the opportunity to do a video. So we'll see how things go with the travel schedule and how urgent things are looking. But we are following these prices very closely. Once again, I'm just saying keep an eye on that gold to silver ratio. That is so critical that we see this ratio start to come down within the next 2 to 3 months. Or else there's going to be, despite what a lot of people are telling you, there's going to be something setting up in the metals that is radically different for another number of years. We've got to see that ratio come down. Thank you, and I'll see you in the next couple of weeks.